Hello everyone, welcome to this episode of Stockertim Special. Today we'll be talking about the SpaceX IPO. SpaceX has now finally officially filed its IPO documents with the Securities and Exchange Commission in the US, and is perhaps the most anticipated IPO in the history of the global financial market, the global stock market. And on this episode, we really want to talk about what exactly makes SpaceX IPO special, what exactly should you be expecting, and what we've done is to actually look at the entire IPO documents, and we've actually put together a couple of things, or few of the most important things that you should actually pay attention to before you participate in the IPO. So if you actually like everything we've been doing, please give us a like, subscribe to our channel so that you don't miss any updates. And of course, this episode is brought to you by Stockertim Gateway, stockertim.com, the platform for retail investors to monitor the global financial markets, get insight, do research, and also get all the knowledge that you need to actually navigate the market. So yesterday, the 20th of May 2026, SpaceX officially filed its S1 filing with the Securities and Exchange Commission for the IPO. SpaceX will now be listing on the Nasdaq under the proposed ticker SPCX, and the expected valuation for the company is around $1.75 trillion. It's going to be the largest IPO ever in the history of the global financial market, in the history of mankind. And basically, the combined entity that will be listed is SpaceX and XAI. XAI, of course, is the company that was actually changed into from Twitter. So you also have Grok, which is a large language model competitor to the likes of Anthropic's Claude or ChatGPT by OpenAI. And this company will now basically be public in market, and share price is not yet set, but the document we have now, which is a filing, is the preliminary filing, which perhaps is still going to change. There's a couple of things that might actually change, but now we have an idea of what we are up against, of what this company will be listed as. Also, there's going to be the share class that will be offered is the Class A common stock, and there is also a voting structure that is a dual voting structure, which means some stocks are more equal than the other. So there is a Class A stock, which is the common stock, that actually has one vote, and a Class B, which the likes of Elon Musk and a few other early investors, which is Class B, has one vote, has 10 votes rather. And we have seen the company being private for too long, headquartered in Texas, the Starbase, but now this company is now going to be public. Now, this is now real, and SpaceX is coming to the public market to start trading, and a whole lot of things that you might not necessarily have access to is now in the public. All of the speculation is to an extent much more clearer now. So this filing actually shows that SpaceX is awaiting the SEC to approve this IPO. Also, the price per share and the share count are still also not fully verified and fully disclosed. And the underwriters, advising SpaceX for this deal, the Gibson and Dunn, and also Davis Polk, those are just the legal counsel for this deal. Now, what exactly does the XAI merger with SpaceX? What does it actually mean? And now that this company is about to go public, there is a huge Pandora box that's now going to be open: the good, the bad, the ugly. And that's what we are going to do on this episode. So let's go back in time before we actually look at some of the key details that you need to pay attention to as an investor. So XAI actually was acquired by SpaceX this year, early this year, 2nd of February 2026. And also financials were actually retrospectively restated to include XAI, X, and Grok. This is actually where it gets very interesting. So XAI, which is the parent company of X, the microblog that used to be called Twitter, and Grok, which is really not very, very competitive compared to ChatGPT or Claude AI models. Also, now this company now runs, 3-segment conglomerate, and it's not necessarily a pure play space technology company, because XAI is, a company that is into AI compute workload, and they actually rent AI data centers. X itself is a social media microblog platform that has been struggling for so many years and is still loss making. Grok is still also very, is a loss making business, and it consumes so much capital, so much resources, and is giving back so much little. Those are some of the gray areas that investors actually need to pay attention to. So this 3-segment under the space business, you have the Falcon, the Dragon, Starship, and launch services. Those are the 3 segments under the space business. The connectivity, which is Starlink, which provides broadband, and now the company is also planning to provide mobile internet and mobile voice services. AI side of the business, which is the XAI, the X, which is formerly Twitter, Grok, and the Colossus data center. We'll get into all of this. It's just to make sure you have a very, very detailed idea of what this business is all about, and whether you really want to maybe invest in this business in the first place, or you actually want to wait it out and see some of the how this business actually play out in the public market. So SpaceX actually started from a bridge loan funding deal, according to the filing, and the business actually has about 14.7 billion, extinguishment cost, according to that deal. It looks like something that is a bit technical, but we'll break that down. And the company has in capital stock purchases of about $3.8 billion that the company has purchased back in the last couple of years. Now, the financials, here's where it gets interesting. In 2023, SpaceX recorded about $10.3 billion in revenue. In 2024, the revenue went up as high as $14 billion. And now, in 2025, the revenue actually went up by a whopping 33% to about $18.6 billion. However, the first quarter of this year, SpaceX said it made about $4.6 billion. Now, is this company profitable? Is this a business that is really just making so much money but gulping so much cost, and the margins are very, very tiny? Let's look at the detail, because sometimes, like they always say, the devil is always in the detail. So, profit-wise, in 2024, SpaceX was actually profitable, but the profit is quite very, very low compared to what the company actually made, about $14 billion in revenue. The profit was just $791 million. And that was the first time the company said it was profitable. In 2025, the company went into loss because of XAI investment and the merger cost. And the company reported a net loss, which is quite significant, of about $4.9 billion. Q1 2026, which is just the quarter that we just left, the business also recorded operating loss of about $1.9 billion. And, the adjusted earnings before interest, tax, depreciation and amortization is actually still in the positive $1.1 billion. So SpaceX, as we have it today, as the business is preparing to actually go to the public market, is still a loss-making business as a result of the AI side of the business that's not really doing well, that gobs a whole lot of capital, that gobs a whole lot of investment, and has not necessarily yielded so much for the business, at least in the medium and the short term. So the main pitch for this business going public, according to this filing, is that they actually provide that space and connectivity, and AI is the growth investment that's actually still dragging this business down. So you've seen a whole lot of headlines about how AI is not necessarily giving huge bottom line to so many companies. We've seen a whole lot of software businesses actually selling off, the likes of Palantir, the likes of Snowflakes, the likes of even a whole lot of software as a service business, IBM. Many of these companies are actually really they've been pulling back because there's this belief that AI models might actually take their launch, and software as a service might actually get smaller margin or even smaller revenue. Exactly, that's the same thing that some AI businesses, core large language model providers like XAI, are still battling with. There's so much investment going on into compute, into data centers, and many of these investments are not necessarily yielding anything at all. As a matter of fact, OpenAI is also in this conundrum as well. So much revenue that they're getting, increasing at a very fast pace, but the cost of running this compute, providing this model and training them with some of those high-end chips is actually taking off everything from the table. So the operating statistics of this business is also quite interesting. So as of 31st of March 2026, when you look at the Starlink business, 9,600 Starlink satellites in low Earth orbit. So far so good. What they've actually deployed about 10.3 million Starlink subscribers worldwide, which is quite interesting. It's not too much, but it's also very interesting because what is the potential that this company can scale working with a whole lot of network providers across different regions of the world. We've seen how Starlink has actually expanded out of America into sub-Saharan Africa, into several parts of Asia, and we've seen what this is actually doing to a whole lot of other regions. So a whole lot of other metrics that the business has actually said, a whole lot of launches, 650 orbital launches that they've completed, a whole lot of statistics. Many of these statistics are very interesting, but the bottom line still remains that this business is quite large in terms of operation. It's quite complex in terms of scale, but the bottom line still leaves a whole lot of questions. And as investors, you might actually want to actually get more insight into some of these dynamics, because when this company goes public, this stock is going to really be very volatile, maybe to the upside in the short and medium term. And when the lockup period starts expiring, you could actually see a few things, seeing this stock pulling back and finding a particular valuation that's more realistic. So based on what we've seen, Elon Musk is going to keep control of the business with the Class B shares, because the Class B shares actually gives Elon Musk as the founder 10 votes per share. So that's quite large, and that means Elon Musk is fully in control of this business. Musk also holds substantial majority of the voting power. Post IPO is actually going to be controlling that, and the prospectus actually warns that limits investors will not necessarily have so much influence in this business. So this is also something you might actually want to pay attention to. You don't necessarily have so much say on how this business actually runs, because Musk is actually the visionary who is actually going to be driving this business. Also, Starlink is going public as the connectivity segment of SpaceX. So there is no standalone Starlink IPO. Starlink is actually going to be part and parcel of SpaceX. So there was that confusion that, is Starlink going alone? So this prospectus is actually confirmed that it's not a spin-off and it's not going to be a separate ticker. Pure play Starlink exposure is not on the table. Now, here's where it gets interesting. We've seen a whole lot of headlines, we've seen a whole lot of speculations, and we are getting the indication that this stock might start trading at about 75.46 per share. That's not necessarily confirmed, and SpaceX rather could actually increase this or maybe even revise this downward. The price per share is still necessarily not determined. Also, we've seen a whole lot of milestone that the company has actually talked about in the prospectus, a whole lot of things that looks very, very interesting. But the bottom line now, that's where this gets interesting, and that's why Stockertim is there for retail investors. SpaceX said they will be doing this IPO. This business is going to list as the most expensive IPO ever. The ticker is SPCX. There are three businesses, the space, the connectivity, and the AI. Elon Musk will keep control of this business through the Class B shares. The price, share count, and exact proceeds are still not yet determined. But at the end of the day, this is no longer a speculation. SpaceX will be doing this IPO. With the debt burden that this business now carries into this IPO, do you actually think this is still worth 1.7 trillion in the proposed valuation? Do you actually think this stock is actually going to tank a few months down the line after this IPO? We've seen several mega tech IPO. They've actually done very well in the first few months or first few weeks, and many of them have pulled back very, very badly. From so many case studies, IPOs have always been an exit door for early investors, and SpaceX might not necessarily be an exception. And that's why we have Stockertim.com, and we've built important and interesting tool, just like what we are using to present it to you, called the Stockertim Notebook. So the notebook is one of the features and tools that we built to actually share intelligence and share, very, very interesting information to our members and to all our users and visitors to Stockertim Gateway. And we are very, very happy to actually launch this feature today. We'll be sharing so much intelligence using this platform, using the Stockertim Gateway and the notebook as well. And of course, we have the Stockertim Gateway itself, which is now perhaps one of the fastest growing platform for retail investors to actually get the needed intelligence, the needed, real-time analytics data. You could actually track the global stock market, the alerts, actually tracks everything, and you are able to actually keep in touch with the market. So what exactly do you think about the SpaceX IPO? Are you participating in this IPO? Are you looking to buy any of this stock when it starts trading later this year? There's still so much speculation around it, but we actually believe that this IPO is going to be the talk of the town. It's going to be the fastest growing IPO, but we also see a whole lot of hiccups down the line, and investors need to be very, very careful. And everything we've shared so far is non-financial advice. Do your due diligence, consult your financial advisor before making any decision. On that note, take care, keep investing, keep growing, take care, and bye-bye.